Hey everyone, welcome back to Corporate Decoder. Today, Z Squared Inc. SQR just filed a Form 8K announcing the completion of their merger with Z Squared Inc. and I am seeing one major shift that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company has completely reshaped itself by merging with a cryptocurrency mining operation, and the implications for its future are huge. Let's dive into what happened. This filing is all about a big change. A reverse merger where Coeptis Therapeutics Holdings, which we will call Coeptis for short, merged with Z Squared Inc. On the 24th of April 2026, Z Squared Inc., the company we know as Z Squared today. Coeptis was the one doing the acquiring, but the way it works in a reverse merger is that the smaller company like Z Squared, in this case effectively takes over the public shell of the larger company like Coeptis that was already trading. So after this merger, the surviving entity Coeptis changed its name to Z Squared Inc. and its stock ticker is now ZSQR. The old Coeptis business is now considered disposed of, and the new Z Squared Inc. is carrying on the business of the original Z Squared, which is crypto mining. It is a complex maneuver, but it allows the crypto company to become publicly traded much faster than going through a traditional IPO. So what exactly is this new Z Squared Inc. doing? It is a development stage, vertically integrated cryptocurrency mining firm. They are planning to operate advanced mining facilities in North Carolina, South Carolina, and Iowa. They will be mining Dogecoin and Litecoin using thousands of machines. They are talking about optimizing their fleet managing repairs and having a smart power strategy. They aim to mine major crypto assets like Dogecoin and Litecoin. They plan to convert these mined coins to fiat or stable coins quickly to avoid price swings. This is a pretty standard approach to mitigate risk in the volatile crypto market. Now, for some serious numbers, a valuation firm put a price on Z Squared's mining operations back in January 2025. They valued the mining machine assets at about $660 million. This was based on assumptions about all machines being L9 ASICs mining Dogecoin. However, they clarify that the machines are actually L7 ASICs, which mine a wider range of assets, including Dogecoin and Litecoin. They say no material update to the valuation report is needed because they effectively optimize the L7S to perform like L9S. That sounds a bit like stretching the truth. But the key takeaway is that the acquired mining business was valued very highly even before this merger. Looking at current market conditions, as of the 27th of April 2026, Dogecoin was trading at about 10 cents and Litecoin was at $55. Their expected energy cost is 8.8 cents per kilowatt hour. They analyzed different miners and found the Bitmain L9 to be the most efficient. Dogecoin is expected to bring in about 85 to 90% of daily mining revenue. You know what everyone wants to know? Will they make money? They did a break-even analysis. This is important for understanding what price crypto needs to be at for them to cover their costs. They calculated their energy cost per unit of hash rate is about 74.5 cents per Dalton Y. This is their fleet-weighted energy cost. If they only mine Dogecoin, their break-even price is about 14.6 cents per Dogecoin. But if they get credit for mining Litecoin too, their break-even price for Dogecoin drops to about 13 cents per Dogecoin. This means they need Dogecoin to be above 13 cents to be profitable, considering both coins. This analysis assumes their electricity costs stay at 8.8 cents per kilowatt hour. It is important to note this break-even analysis excludes things like pool fees, setup, maintenance, and other expenses, so the real break-even will be higher. They are not going to mine alone, they will join mining pools. These are groups of miners who combine their computing power to mine more efficiently and share the rewards. They are looking at top operators like EMCD Antpool and VibTC. They expect pool fees to be up to 4%. Security is a big deal in crypto. Z Squared is using something called multi-party computation, or MPC, with Anchorage Digital for storing their crypto assets. This means no single person holds all the keys and multiple approvals are needed for transactions. They also have insurance coverage up to $100 million for crime-related losses. It sounds robust, but it is important to remember that digital assets held by Anchorage Digital are not FDIC insured. Now let's look at who is in charge. David Halabu is the Chief Executive Officer and has a background in real estate and alternative investments. Michelle Burke is the Chief Operating Officer and she has extensive experience in managing crypto mining operations and has been CEO of Minting Dome. Brian Cogley is the Chief Financial Officer with a very solid accounting and finance background. The board seems to have a mix of tech and finance expertise too. 3 of the 5 directors are considered independent, which is good for corporate governance. Looking at executive compensation for 2025 and 2024, it seems like the outgoing executives like David Mihalik and Daniel Yeris were making around $360,000 a year. For the new team starting now, David Halabu will get a $300,000 base salary plus a significant equity bonus opportunity. Michelle Burke will get a $250,000 base salary, also with a large equity bonus. Brian Cogley will receive a $200,000 base salary. These equity awards are tied to company performance and stock price appreciation. Let's talk about who owns the company. Immediately after the merger, BSG Series CMLLC owns a massive 80.73% of the company's stock. This is a huge stake, and they are planning to distribute these shares to their members soon. After that distribution, no single member is expected to own more than 5%. What happens to those dispersed shares could significantly impact the stock price. They have 150 million shares of common stock authorized. Notably, they recently did a 1-for-20 reverse stock split to boost their stock price and meet NASDAQ listing rules. This kind of split often signals that a company is struggling to maintain a minimum share price. Now, for the risks, there are a lot of them, and they are significant. They are operating in a highly competitive and rapidly evolving industry. The price of Dogecoin and Litecoin is extremely volatile, and their entire business depends on it. If prices drop, they could become unprofitable quickly. They also face risks from government regulation, cyber attacks, and technological obsolescence of their mining equipment. This is a big one. Their auditors have included a statement about substantial doubt regarding their ability to continue as a going concern. This means they need more money to operate and expand. They have incurred significant losses in the past and expect more losses. This is typical for a company in the crypto mining space, but it highlights the risk for investors. A major concern is NASDAQ listing. They previously received a warning about their stock price falling below the minimum required for listing. They were granted extensions and regained compliance at one point, but the risk of delisting is always there if they don't maintain the required standards. Delisting would severely impact liquidity and make it harder for investors to sell their shares. The environmental aspect is also worth noting. Crypto mining uses a lot of energy, which can lead to higher costs and environmental concerns. They say they have strategies to manage energy costs and participate in curtailment programs, but it remains a key operational challenge. The competitive landscape is fierce. They are up against companies with more resources and experience. They believe their altcoin-focused strategy and operational agility give them an edge, but competition is always a major risk. So what is the bottom line? Z-Squared Inc. has just completed a major transformation, becoming a publicly traded cryptocurrency miner. They have a high valuation for their mining assets and a clear operational plan. However, they are up against significant risks, including extreme crypto price volatility, the need for considerable capital to grow, and the very real possibility of their operations becoming unprofitable. The going concern warning from their auditors and the ongoing NASDAQ listing concerns are serious red flags. The key thing I will be watching is their ability to manage costs, especially energy, and to generate consistent profits in the face of wild crypto market swings. If they can navigate these challenges and meet their operational targets with the new leadership team, they could be interesting, but the risks are substantial. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this video, you know what to do. Like, comment, subscribe, and check out the Discord.